Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, entrepreneurs. Today, I have the pleasure of interviewing Chris Perkins, founder of Abundance Asset Management. Welcome to the show, Chris.
Thank you very much, George. Thanks for having me.
All right, awesome. Well, hey, you have a hedge fund, which is very exciting. We're going to get to that. I just mentioned the name of that hedge fund. But I'd like to just bridge into that a little bit before we go, because I know a lot of our audience is in commercial real estate. I'd like to make the show about alternative assets in general. And I'd really like to help people, particularly the accredited investors in the audience, figure out exactly what's out there. Now, you're not only somebody who's been in commercial real estate, but you kind of did it in a non-conventional way. So why don't you tell us, how did you get into it? And then we'll get into your hedge fund.
Yeah, I don't want to say that it was by accident, but it was kind of a fortunate series of events. So basically, what happened was this restaurant was going bankrupt in town. It had been like the going concern for a long time. It was called the Venice House, and it was going for a long time, 25 years in business, right? And then the son took it over, decided he needed to fancy it up and make it something that it wasn't. And so when you do something like that, he didn't take into consideration that he was going to lose a lot of his existing customers. So he had to replace those customers with someone. And the niche that he was going into was like $80 a plate. And keep in mind, this is in 2004. So $80 a plate's vastly different in 2004 than it is today, right? And so he lost a lot of his customers, but didn't gain enough of the new higher clientele. So results ended up being nobody came to the restaurant anymore because it was too expensive for his existing class to eat there as often as he did. And there wasn't enough of that niche class to fill the restaurant enough to make ends meet. And so when I took it over, it was doing $400 a day in sales, which is like not enough to turn the lights on, basically, right? It was 4,300 square foot building. So long story short, when I was buying the place, we entertained doing a lease agreement because I didn't have a lot of cash saved up. I was only 21 years old. And so, maybe the cheaper option is leasing. And they wanted $5,500 a month to lease the building. And then I went and checked out getting a mortgage, and I was able to get a mortgage for $3,300 a month at 100% loan. So it's like, that's kind of a no-brainer. I'm saving myself $2,000 a month, and I'm becoming a real estate investor simultaneously there.
Yeah, outstanding. Well, I think that a lot of great things in the kitchen happen by accident. So I think that's good either way. I just had a little kimchi incident downstairs. My son is always cooking things from around the world. And we discover a lot of very exciting things by accident.
Yeah, happy accidents.
So then you got the commercial real estate, and at that point you really have two businesses, because obviously you're operating and then also owning the real estate. So I know you did a lot of work to optimize the value of the real estate. Can you tell us what you did?
Yeah, so in the beginning, we wanted to keep restaurant costs. So, you have your two assets, right? You have your operating restaurant, just like you said, and then I have a real estate investment company. And so essentially we had a lease agreement between the operating company and the real estate company. So we wanted to make the lease as low as possible because we wanted to keep costs low while we gained some traction in the restaurant and got some revenue going in. So we made the cost of the lease exactly the same amount as the mortgage. It was like $3,500 or something a month. And then as the restaurant gained traction, we started raising the rent on the restaurant. And, one could argue like, oh, you're just taking money from one hand and placing it in the other hand. And yes, that is what we were doing. But the reason that we did that was because we wanted to be able to piece it off in the end and sell out the restaurant, sell the business to someone separately from the building. We didn't want to sell both in the same shot again. So what we were doing was proving on the books that the restaurant's capable of paying these rents.
Right. Yeah. So every step of the way, then, therefore increasing the value of the real estate. So great story behind that. Now, I think that you just started working straight out of high school. I guess this is probably a story that would appeal to a lot of entrepreneurs. Sounds like you're somebody who probably didn't enjoy school too much, but you get out into the workaday world, you love money, you're working multiple jobs, and you just find ways to make great things happen.
Yeah, you're hit the nail right on the head there with not loving school. Looking back now, I wasn't learning the way that I needed to learn. I learned by doing. Theory is really difficult for me until I put it into practice. And then once I put it into practice, then I can iterate on things and refine things. But it's difficult for me to learn by theory. So what I ended up doing in high school was getting my classes done, scraping by with like minimum marks. Like I barely graduated high school, and I had exactly enough credits to graduate high school. So my last semester of high school, I only had school in the morning. So I would work 12 to 14 hours a day and go to school for 3 hours in the morning and mostly sleep while in school.
Yeah, exactly. Wow.
Yeah.
All right. So then fast forward a little bit. So you got your restaurant, it's operating nicely, which I guess I have to ask you because I'm somebody who just loves to eat in restaurants, but I know what I think of the restaurant business. Would you say that's a good business to be in or what? What after all this, is it
Uh,
still a great business to be in?
After all this, I think I could tell you a little story here. Maybe it might take me like 4 or 5 minutes. Would that be okay?
Let's do it.
Okay. So when we opened the restaurant, there was nobody gonna come into the restaurant, right? So when we bought it, like no sales. They were having like maybe 10 customers a day in there, and we needed a minimum of 70 customers a day. So this is a massive increase in foot traffic that we need. And when I opened it, I had no money for a sign on the building. I had no money for advertising, and I barely had enough to get inventory into the building enough. I didn't have a liquor license yet when we very first opened because the paperwork was still going through. And then, so my dad is like, how are you going to get people into the building, Chris? You don't understand. People have not been in the building and they're creatures of habit. How are you going to do that? We don't have any money for advertising. And I'm like, Dad, don't worry about it. I got it. Just that's the least of my concern. And he's like, it's most of mine. So you need to tell me how you have this figured out. And I'm like, just chill. I got it. And so I didn't really know what I was going to do, but I was just going to do something, right? Doing something. And so I went around and just had takeout menus with me and went and told 200 businesses around town, like, hey, this is who I am. This is where we are. And this is what we're doing. Here's a menu. Come give us a shot and we'll go from there kind of thing, right? And if you like the food, keep coming back, obviously. So looking back, I understand now how much of an impact that had on people. People were struggling to find workers at the time. It was booming oil country, and you can't get people to work, right? So nobody has a work ethic. Everybody's used to people being lazy, not showing up for work, things like that. And then this 21-year-old kid comes walking in the door. He's like, hey, this is who I am. I'm starting a restaurant, and I'd be really honored if you'd come give me a shot and have a plate of food with me. And that would have had a huge impact on me as well, now that I'm my age looking back. But at the time when I'm running around, I'm just this little kid like, please come eat at my place. So
Okay,
yeah,
so to give you some context then, so you're like around the Alberta Saskatchewan border.
exactly, in Canada. Yeah, Lloydminster. It's
Okay.
Canada's only border city. Population is about 23,000 people. Very small.
Okay.
Yeah, very small town.
Well, I love the guerrilla marketing story. I think it's great because, hey, it works with restaurants, works with apartments, works with startups. And I think people overlook it. They think everything's got to be glossy and ready or made for TV. But passing out flyers in your local area, particularly for a locally based business like that, bricks and mortar, I think is just huge. Don't overlook it.
Yeah, don't overlook it. And Nick Santanasso, I don't know if you know who he is. He's a public speaker. He's worked on Tony Robbins stages and stuff like that. And he's like, the pursuit of perfection is just an excuse.
I love it.
And that really resonated with me. I didn't even know that until, like maybe 8 months ago, a year ago, kind of thing, is when I came across his quote of that. But I'm like, that's, that totally applies in this situation. Nothing was perfect, like nothing, and nothing ever is perfect, but you have to move forward and iterate.
Yeah, absolutely. But you did a lot of other interesting things along the way. So you had a sort of a travel phase after you sold the restaurant.
Yeah, so I don't know how deep you want to get into the restaurant side of things, but that really kick-started everything. So the first, actually, it was the second day that we were open, and my dad comes walking into the back of the restaurant, and there's steaks everywhere. It looks like chaos, right? In the back of a restaurant, when you're sitting out in the restaurant, it's like all peaceful, and there's background music, and you're like, oh, this is lovely. And in the back, it's like,
Hell's
right?
Kitchen.
Yeah, Hell's Kitchen, exactly, right? So my dad comes walking in the back, and all he sees is this chaos. He doesn't see all the people sitting out front, like, having a peaceful time. He comes in the back, sees all this chaos, and he's like, "Are you crazy? Like, what are you doing?" And I'm like, "Dad, this is awesome. We got people in the restaurant. That was your worry, right?" And he's like, "I cannot believe that you actually want to do this for the rest of your life." And then I'm like, in my head, why do I have to do this for the rest of my life? But that's what he came from, right? He started a business and he worked it his entire business career, and then he sold it and retired. So that's his linear path of things, right? And that's what he knew. He's got something good, stick with it till the end, and then retire. He's got his passive income with real estate and all that stuff. But for me, I was like, this is just a stepping stone. And so to kind of go back to your other question about, is the restaurant business a good business to get into? Then it was, because I didn't, and in the town that I was in, I didn't require like all the fancy modern, $5 million building kind of thing, right? It was just like, have good food, lots of meat, lots of potatoes, people will come. The atmosphere doesn't even really matter there, right? Of course, people love a good atmosphere, and the restaurant business, though it's kind of limited on an innovation side, it's gotten a lot classier, I'll say, right? With like fancy flame tables and stuff like that. But long story short here is that I use that business as a stepping stone to move into other businesses and to move deeper into commercial real estate. So before I went traveling, essentially the restaurant across the street came up for sale, and the building and the land and everything was up for sale. And I'm like, hey, could just do this again. That was pretty good, right? And it was same thing. It wasn't doing very well. It was losing a bunch of money. And so I went and took that over as well. The franchise ended up, that was a franchise business instead of like a one-off real estate or a one-off restaurant. So what ended up happening, it got pretty complex, but the franchisor was taking so much from the franchisees that they just didn't make any money. And so that's a difficult business to be in, because you're basically your boss, right? Your franchisor is dictating how much money you're going to make, and you're just scraping by. So I'm like, if my privatized one-off restaurant is getting a better deal on food than a conglomerate with 50 stores, this is a problem. So I went into the lease agreement and essentially line by line just dissected this lease agreement, found a clause in there that, because I had this business structure of, I had the operating company operating the business and the real estate investment company owning the building, I defaulted on my rent and kicked myself out. And so the franchisor was left with a choice. They either take over the restaurant and sign a new lease with the landlord, or they try to convince me to stay in some way, or they take over total management control of it, and they still, no matter what, have to sign a 10-year lease agreement, or they have to get out of the building. So they backed me into a corner first, And then I was like, nah, you backed yourself into a corner now because you're going to be signing a lease agreement with me, or you're going to be moving out, and then I can start Chris's breakfast joint or whatever, right?
Yeah.
And then I won't have to pay the franchise fees. There's already customers coming in the building, and they're not coming in there because of the franchise name.
All right, awesome. So I gather that after all that, you just wanted to take a break, which I think is one of the great things about entrepreneurship. You can do well enough for yourself. You can go travel all over the world, which you did.
Yep, I did. Evidence behind
Uh,
me.
all right, all right. Well, anyway, so then, okay, just one last thing before we get into the hedge fund. So you also had another startup, this time in tech,
In tech?
the digital asset management.
Yeah, with Abundance Asset Management. Yeah.
Okay, got it. Okay, so
Yeah.
then this is already the hedge fund part of
Yeah.
the saga.
Yeah. So basically, after the restaurant sold, after I did the thing with the franchise restaurant, I was like, hey, let's do the same thing with the other restaurant, piece off the restaurant, keep the building and land, and then have passive income. So it took 2 years after I sold the first restaurant to sell the second restaurant. Then after that 2 years, this was 2012, November 2012, when I got out of the second restaurant. Then I was basically had my time freedom and I had passive income from renting those commercial leases out. So then I kind of doubled down on commercial real estate investing, but I was doing it all remotely. I lived in a motorhome. I sold all my worldly possessions, my house, everything that wasn't bringing me cash, I sold, and lived in a motorhome for 2 years.
Okay, pretty amazing.
Yeah.
So okay, so now you launched a hedge fund, and I think a lot of people think, well, hey, I'm great at picking stocks. I'm a genius. Let's launch a hedge fund, but it's not like that. There's all kinds of regulations that you have to jump through, a lot of hoops you got to jump through to make it happen. So tell us, what does it actually take to launch a hedge fund?
So the investment thesis, I kind of describe it like you're building a house because I had come from the real estate side, and most of your audience is real estate. So I look at it like you're building a house. So the trading or the investment thesis is the foundation of the house. You need that to get anywhere. So you start with that, get your investment thesis, and then you build on that. So what I did was, there's been many iterations of the hedge fund over the course of its inception. And what I wanted to do was trade like the top conglomerate tech stocks. But then, I had about 20 stocks picked out, and then another 10 that would be a smaller portion of the portfolio as the portfolio grew. And then I would get people coming in and they're like, I like all the companies except these two. And they're like, your focus is wrong. Why? Like, you don't need to concern yourself with each individual company. So I would get this though, and they'd be different companies, and people would pick them apart for personal reasons or whatever reasons, right? So I got to a point where I'm like, going back to the restaurant days, I had this theory that people will tell you what they want if you just have a conversation with them. And so people are telling me that they don't want to pick stocks, or they don't like the stocks that I've picked, or they don't like the stocks that other people have picked. So let's not get into the stock picking thing. Let's go a different route and go with something that is very risk averse, that self rebalances, has a high probability of never going to zero, because we'd have a lot worse problems if this ETF that we trade does go to zero. And then let's design an option strategy to generate cash flow around that asset. And so this is 4 years in development, basically.
Right, and that thesis is huge because obviously that's what attracts your investors.
Yeah, exactly.
Okay, all right. So then, but you didn't mention anything about the regulations. So what does it really take to set one of these things up? You've got to have obviously your thesis you mentioned.
Yeah.
There's all kinds of regulations that you got to deal with. You got to have a certain number of assets under management, or else the thing doesn't really go.
Yeah. And so we looked at what other hedge funds. So we came up with our thesis. That's step one. Step two, who's our customer? Who's going to be our limited partners, right? Are we going to have accredited investors? Or are we going to have non-accredited investors? How much money do we want to raise? So that's kind of going to be your process of elimination of how much money do you want to raise, number one, and what kind of vehicle does this, or sorry, what kind of avatar of LP does this investment vehicle appeal to, right? So who does it appeal to? Then you have to design your regulations, or your rather the structure of your fund around the regulations that protect that avatar of LP, limited partner. Does that make sense?
Yeah, perfect. So, okay, cool. But what really got you into that? So you done all these different things. I know at one point, I guess more than anything, it's always passion that leads people from one thing to the next. So you kind of take your deep dive into equities, etc., and just decide, well, hey, I started 2 restaurants. Why not start a hedge fund?
Yeah, there you go. Well, I did have the real estate investing company, and so I run into some problems with the real estate investing. There's a plethora of problems, as I'm sure some of the experienced real estate investors are aware of on the that are listening. One of the problems with real estate is that it's illiquid, meaning very difficult to sell. If you need to sell it tomorrow, it's never going to happen, right? If you need to sell it next week, chances are pretty slim that it's going to happen. And so you need to have this runway, I call it a financial runway of, if that piece of real estate's burning money, then you only have so long before you go broke, depending on dollars and cents, basically. And so how much of a runway do you need in the bank? And so then when COVID happened, that was kind of like, okay, now I'm really getting steered in the direction of something that's more scalable, more liquid, and I don't have to work with contractors. I don't have to worry about terrible tenants. I don't have to worry about, the restaurants not maintaining their HVAC units and the thing burning out, and then it cost me 60 grand. I don't have to worry about them, not maintaining the roof. I don't, all like just plethora of things that I don't have to worry about anymore, right? So, and then it's massively scalable. So you go from something, real estate is scalable, of course. I mean, there's lots of people that do it, but it is difficult to scale. And so I wanted this trading strategy that would generate cash flow. So essentially turns the public equities asset into a real estate asset, where you don't have to concern yourself with what the fluctuations of the price fluctuations of the asset do. You just keep collecting profits up, down, sideways. Doesn't matter to us in the short term what the stock does. We just concentrate on capturing cash flow. And so we named it Abundance Asset Management because I feel that I firmly believe that you get what you seek. And so having this abundance mindset of like the market will do whatever the market is going to do. We just have to control our own reactions to what the market is doing and have a risk mitigated strategy in our approach.
All right, that's awesome. I love the name, by the way. Now, somebody who's done so many different things successfully, I've got to ask you some productivity questions. What is your number one productivity hack?
I get up early now. I got out of that habit when I was traveling, but I'm up at 6 a.m. every day and immediately get out of bed and shower. I don't even look at my phone before I get out of bed. I shower first, and then I do some stretching, kind of get my body limber, and then I start with 6 a.m. So in the time zone that I'm in, I have an hour and a half before the markets open. And to be clear with my strategy, I don't have to watch the market every day, all day. I'm not staring at a computer screen, none of this stuff, right? And so essentially, I have a pretty good idea if I'm going to have to make a trade that day or make multiple trades that day just by looking at my phone and, see where the market's at. Okay, well, I'm definitely not going to have to make a trade today. So then I can plan my day around that. And, whether it's investor outreach, basically I schedule an hour a day to get back end work done on a certain aspect of the business. So whether it's content creation or having this podcast with you or, looking for another podcast to go on, so on and so forth. So just spending little blocks of time, and I account for 15-minute increments all the time, right? Even if that 15-minute increment is filled with a break, doesn't matter. it's still accounted for. And it's like, okay, I need to take a break. I need to go to the store, get some groceries, whatever. I'll take an hour, go do that, come back, and then I'm back on the clock, I guess, if you will.
Yeah, I love that. Nothing like being an entrepreneur and being able to say, well, hey, I've got 2 hours before my next meeting. Time to do the grocery shopping.
Yeah,
It's hard
exactly.
to do that in my former life. Well, anyway, with that, I'd like to head into the most challenging part of the interview. Let's head into the rapid fire of the seven. You ready?
Yeah, I'm ready.
All right. If you could be known for only one thing, what would it be?
Bringing abundance to non-accredited investors.
What's the greatest lesson in leadership you've learned as an entrepreneur?
Execute and then iterate.
What is the personal characteristic that has been most pivotal to your success?
Relentless perseverance.
All right. Now let's add a little randomness to the mix, kind of like a cooking show. We're just gonna
Yeah, that's a
see how
serious
this
deck
turns
of
out.
cards there.
Tell me when to stop cutting.
Yeah, okay, stop.
All right. What makes a house a home?
Love, a family, and an abundant lifestyle. I think it depends on who the people you are surrounding yourself with, definitely.
I love how you typed that in. That was perfect.
Yeah.
So name a book that helped to forge you as a leader and as an entrepreneur, and why?
There's so many. I'd say Money Mastery by Tony Robbins was a pretty big eye opener for me. It's a very old, relatively old book, I think '08. But one of the things that really stood out to me in there was, the 27 trillion, now it's 27. When he wrote the book, it was a $13 trillion economy of mutual funds that underperforms the S&P 500. And now it's a $27 trillion industry that is overcharging for underperforming results. And this drives me crazy.
Yeah, absolutely. And you're, I think, addressing that through not over leveraging. And I know there are a couple other things you mentioned.
Yeah. And so, yeah, controlling your risk through exposure is one thing, and still being able to take part in the runs is, in the stock market bull runs is really important. And so if you miss out on a little bit of the down days, but you can still take a decent part of participation in the up days, overall you'll end up winning in the long haul. And so, I just looked at all of the stats out there with abundance asset management, and all of these people overpaying for underperforming results really got under my skin. And I'm like, I don't want to be like that. I want to offer very, clear key performance indicators that if this happens, this is where we'll be at. And so people know they can watch the market and understand where they're going to be at with our investment versus them just going out to buy stocks themselves.
What's the biggest hurdle you've overcome in your business in the last year?
Not letting the start stop us. So we wanted to have $1 million raised to launch the fund. All the numbers just, that's kind of a base best operating results. So we wanted to have $1 million. I had 350,000 of my own cash to put into the fund. And I'm like, okay, I've got some skin in the game ready to go here. I want to raise another 650 from other people. Everybody we talked to was like, this really sounds great, but we need a track record. We need something that is real, audited results. And I'm like, well, it's like, do you put the horse before the cart before the horse? I don't know which to do here. And I'm like, go back to the lessons you learned before, execute and then iterate. If we can use 350 grand to gather some trading history, gather this performance history that people require, and these people weren't requiring it because they were wanting to like, oh, you're the new kid on the block, we can't do this, it's too much of a risk. it's part of their mandate, right? So it's in their documents that like you need to have some audited proof of what's going on. You know, you look at the Bernie Madoff situation and people are worried, right? And there's also, you know, the list goes on, FTX and all of these other things, so many scams out there. And I don't blame people for being skeptical and making sure that there's some serious paperwork backing this up. And so we're gathering that track record now. We're going to get an audit done for December 31st ending this year. And we're still doing investor reach out, but we're doing it more in an approach where we are building a relationship with people rather than calling them saying, hey, you know, this is who we are, this is what we do. We're calling them saying, hey, what are you interested in? Have you ever, experimented with public equities? Do you have any interest in public equities? If you do, we can show you how to trade public equities and use our strategy. And then quickly you'll see that it can offer much better returns and much more risk mitigated, much more risk mitigation on that side. So the best part is you can try all this in a simulated trader where you don't have to risk any money, any actual money. You can just use your time, understand it. And our feeling is if people understand what we're doing and they're comfortable with what we're doing, then they're an educated investor, bringing them to a certain level of sophistication so that if they understand what they're investing in, they're going to invest with much more confidence.
Can you send us out with a quote to help forge our listeners as leaders and entrepreneurs?
Don't give up. I know that's kind of cliche and like lots of people would say that, but to preface that, you must make sure that your thesis or a business thesis, whatever it is that you're doing, is scalable. That was the number one thing that I needed with this next business, is it needed to be scalable to 100 million, 200 million, a billion. Where does it end? And figure out where it ends. So I guess if you want to get that into a more concise quote, leveraging your time and scalability will pay dividends in the future.
And so with your trading strategy, how large could your assets under management grow and still have the trading strategy work?
So this is an important, amazing question. So what we see, we trade one asset right now, one ETF. And what we see in the future is that we'll have multiple different funds that trade single assets. We use our option strategy to mitigate risk for the investor. So let's say that you want to only invest in Google stock. We can use our strategy, apply it to Google stock. And so our strategy is scalable to billions and billions of dollars. Like it's endless. We'll never get there. We'll never get fully scaled. I mean, I'll be dead by the time that happens, right? But we could trade $1 billion on the asset that we trade right now, the 𝐂𝐞𝐫. We could trade $1 billion on the S&P 500. We could trade $1 billion on the Dow. We can trade, there's massive volume on all those ETFs. And then you take that to Google, there's massive volume on that, Apple, Microsoft, the list goes on, right? And so what this will enable the investor to do is invest with Abundance Asset Management in the asset that they desire to invest in already. And then we apply our strategy and generate cash flow.
Okay. Now, before we wrap up, I just want to make sure everybody knows how to reach out to you. So how do we reach out to Chris Perkins?
LinkedIn, Chris Perkins, just like it sounds, CHRIS. And then same thing on Facebook. I'm on Instagram, but barely. And then just email chris@abundanceassetmanagement.com.
Outstanding. Thank you so much for taking your time to share your knowledge and experience with our audience.
Awesome. Thanks for having me, George.